We are heading into the last quarter of 2025, a year that has tested supply chains like few before. In this intelligence review, we break down the major events of 2025, the industries and countries most affected, and why knowledge is the most valuable form of resilience. President Trump called it Liberation Day, as the world woke up to a new president and a new tariff threat. Initially up to 60% on Chinese goods, 25 to 100% on imports from Canada and Mexico, 20% on virtually all other imports, and even 100% tariffs on BRICS nations. For automotives, this would have seen input costs surge with 60 to 70% tariffs on Chinese components, while solar and wind projects relying on Chinese turbines or panels saw projected costs climbing beyond viability. Although an update in April reduced most tariffs to a 10% flat fee and legal challenges may prompt further relaxation, tariff impact is a resilience topic that isn't going away. In February, armed conflict around Goma in the Democratic Republic of Congo put the squeeze on the minerals that underpin global industries. Cassiterite, critical for soldering and electronics, saw supply risks from militia taxation. Coltan, essential for capacitors in smartphones and aerospace, was hit by smuggling and instability. And wolframite, key for aerospace and tools, faced transport disruptions. Meanwhile, gold smuggling rates were so high that over 90% of the DRC's supply was estimated to be illicitly exported. These minerals may be buried in Central Africa, but they are at the heart of global supply chains. In March, the Bab al-Mandab Strait became a flashpoint. Houthi blockades cutting traffic dramatically. Tanker volumes through the strait were already down 77% by August 2024. However, continued disruption sees vessels reroute around the Cape of Good Hope, adding 4,000 nautical miles to Asia-Europe journeys. That detour slashed global shipping capacity by 15 to 20%. The price tag is huge. Container freight rates from Asia to Europe rose 30 to 40%, while insurance surcharges for vessels attempting Red Sea passage climbed to 10 to 15% of vessel value. On June 13th, airstrike exchanges between Israel and Iran placed global energy arteries at risk. The Red Sea and Strait of Hormuz were at the epicenter of the conflict. Together, these waters handle around 20% of internationally traded oil and 10 to 12% of world merchandise. Markets reacted instantly. Brent crude jumped 9% and war risk premium for Red Sea shipping surged from 0.7% to as high as 2% of hull value. Each new escalation compounds delays, ties up working capital, and raises freight costs. Analysts see a prolonged proxy conflict as the base case, cementing higher energy, insurance, and logistic costs well into 2026. So, just how exposed is the world economy to the Strait of Hormuz? The passage carries around 20 million barrels of oil per day, a fifth of global crude, plus a similar share of global LNG. This year, Iranian threats to block the strait raised scenarios of oil spiking to 100 to 150 per barrel. This is particularly concerning for selected importing countries. For example, 95% of Japan's crude flows through the Middle East. 71% of South Korea's crude comes from the region, and even China imports 40% of its oil via Hormuz. Due to the wider economic implications, any closure would lock Gulf exports into a single choke point and trigger systemic disruption. The ongoing Middle East conflict also triggered gas cutoffs and a global fertiliser shock. Iran, the world's third largest urea exporter, shut down all 7 major plants, suspending 4.5 million tons of exports annually. Egypt, a rising exporter, also ceased production, putting 3.4 billion in exports at risk. Together, about 13 million tons of global fertilizer capacity disappeared. Urea prices jumped 70% in days, and food prices are projected to rise 10 to 20% by late 2025. Expect to see ripple effects in key markets like Brazil, Argentina, Turkey, and South Asia soon. So, what's next? As we look to the rest of 2025, the risks we've covered are far from resolved. Choke points and conflicts remain critical, each new disruption adding pressure to strained supply chains. The lesson is clear. A supply chain ready for a changing world is a supply chain ready for all worlds. There's always a cost to being unprepared. Without visibility, your company could face production stoppages, rising costs, and stranded shipments. The knowledge premium is the gap between reacting too late and acting in time. Prewave situation reports keep you ahead of disruption. Subscribe now. Knowing first means acting fast, and acting fast means keeping supply chains moving. Prewave customers have even more advantages. Situation reports now feature alert IDs, enabling you to analyze your exposure across all supply chain tiers in real time. You'll know exactly which of your suppliers are impacted by global events, helping you plan the best response to protect your network.